CNBC Africa special, and today we are seated with the governor of the Central Bank of Rwanda, Mr. John Rwangombwa, and we're going to talk everything from the latest listing on the London Stock Exchange to what does the MPC in the country entail, and what does the central bank think about what's going to happen in 2020. Thank you for joining us and thank you for your time, Mr. Governor. Now, quickly diving into it, Rwanda, 7th country to list on the London Stock Exchange, to list a bond on the London Stock Exchange. Is this a great sign of confidence from the World Bank?
Yes, it is, and we appreciate our partnership with the World Bank. They have been really one of our main development partners for quite a long time. And so this initiative they started is to support countries manage their exchange risk by inviting international investors to invest in bonds listed in domestic currency. And Rwanda, with our track record in terms of economic performance, the World Bank was happy to really go with us to the international market using their AAA rating. So they're able to issue a 40 million bond to international investors. And this was denominated in Rwandan francs. So again, since it was an international bond, it was listed on the London Stock Exchange. So it's the first time we are listing a bond on this London Stock Exchange. Last time when we issued the Euro bond, it was listed on the Irish Stock Exchange. So it's also good that we are there on the London Stock Exchange.
Now, this is very good for a country who's trying to grow its capital markets and trying to grow the capital markets. Not so many African countries are doing as well. Why is it important to grow the capital markets in the first place?
Twofold. One, of course, we as a developing country, but even developed countries, the need for financing for investment is key, whether public sector investment or private sector investment. So what we are doing as Rwanda, and especially as government, trying to support the growth of our capital market is to create an avenue of financing for development for government projects, but most important for private sector projects. So today, unfortunately, we haven't had private sector companies issuing, we've had them issuing portfolio, issuing shares on the stock exchange, which is good, and we've had very successful IPOs on the stock exchange. But we would want to see them even issuing commercial paper, borrowing from the stock exchange, not just relying on the commercial banks. And what we've been doing as government is to create that yield curve using the government bonds. We started in 2014, and by then we were issuing bonds on a quarterly basis. Now we've matured to issuing bonds on a monthly basis, and we've also gone to reopen bonds we've already issued before. So this is helping to create a yield curve that will support private sector borrowers to align themselves to the market conditions created by the government. But also, the more products we bring on the market, the more liquidity, the more liquid the market is, and the more investors are attracted to the market. And therefore, at the end of the day, it will be easy for private sector to raise capital on this market. So it's really for the purposes of creating an avenue for financing development of our country.
So earlier you talked about the issuing of monthly bonds. To the layman out there, it looks like more borrowing from the government. And this increased borrowing, so that means there's more debt. That means more money needed to pay back in the long term, yes, which can lead to maybe more taxes. Yeah.
Yes. Mm-hmm.
Don't we risk into falling into a debt trap? We've seen some of our East African community neighbors falling into heavy debt traps, which almost got to about 49% of their revenue collections. How are we shielding ourselves from that?
We are responsible government. And every year before we determine what borrowing or what deficit we'll have in the budget, I should leave this question for you to ask the Minister of Finance, but let me just say it as one of the economic managers. So the borrowing is linked to the overall macroeconomic framework of the country. And fiscal is a part into this bigger picture of the macroeconomic framework of the country. So on an annual basis, before we decide what chunk of borrowing government wants to have in their budgets, we do a debt sustainability analysis. And going by the general benchmark given by African countries is wouldn't want our NPV of debt to GDP to exceed 50%. So we're still far from that. I think today we're at 39% in total. And the other important thing is we borrow for investment. We don't borrow for consumption. So as we borrow and invest in productive sectors or in projects that will improve the productivity of the economy, we're also increasing the capital base. And as the capital base increases, it gives us more room to borrow and invest further. And so the only problem would be you borrow and just spend the money on consumption. But we don't see, like when we project even the medium term, we don't see any problem that we are going to be hitting the 50% benchmark we've given ourselves. Though the developed countries are even at 150, 200% debt to GDP. So it's what's important is being able to manage debt properly in terms of what you do with the money you borrow. So we borrow to invest, to improve the resilience of our economy, to improve the productivity of our economy, and the best in short to generate more revenues. So we are not going to generate more revenues by increasing taxes, but by widening the tax base. So government is able to improve, to increase on the tax. Like today, when you look at our taxes, I think it increases in nominal terms by 20% per year. No tax rate has been increased. If anything, there's been reductions in tax rates. So there's no risk at all that the government will find itself in a debt trap and will want to increase taxation. No. I think that is done in managed way, and the DSA that is done, the entire, and becomes part of the bigger macroeconomic framework. We look at the financial sector growth. And these bonds we're issuing on the domestic market again, we take care of the private sector borrowing. So we avoid any crowding out of the private sector. So yeah, we don't see any risk at all.
Hey, Governor, I want us to move to the local players, to the local banks. You've maintained the key repo rate at 5%. It's not really intertwined with, the banks still have the freedom, but they seem to be playing ball, if that's a terminology we're going to use. Yeah. Why, and they're still making profits. Yes. Why does it seem to be there's a source of comfort from them and confidence by them, despite you increasing like capital base last year, and they are still able to perform as well as they have done so?
I hope I'm getting your question, because I don't know what you mean by them being comfortable. The fact is, as we said again in the press conference, we see our financial sector, financial institutions well capitalized. So even before increasing the capital requirements, most of them will not even need really to bring in new money. So today the measures we take, looking at their capital vis-a-vis the risk assets they are taking on, they are all comfortable. So they are able to lend because they are sitting on a strong capital buffer. And the good thing that we've noticed is most of the financial institutions, they've been reinvesting the profits they make. None of them has had 100% dividend payout, so they have been reinvesting. So that is really widening their capital base. And so that is positive. The other thing, again, as we said, banks contribute to the good performance of the economy, but the good performance of the economy contributes to the health of their business. So because of good performance of the economy over the last few years. We've had borrowers being able to service their loans, being able to increase their borrowing because they can invest with this growing economy. So that grows the loan book of the banks, and in a healthy manner that improves on their profitability. And the more they build their loan book, they start benefiting from economies of scale. So the efficiency of the overhead cost and all that improves. So therefore, they're able to improve their profitability. And so what we've been doing by maintaining an accommodative monetary policy is really to allow them and to encourage them to continue lending, because we don't have any really big inflationary pressures. So we can send signals to the banks to allow them to continue lending. And the other thing that with the new monetary policy that we saw this year, last year 2019, is using a new monetary tool that we call reverse repo. That is, normally they didn't do much borrowing from the central bank, but with the new monetary policy framework, we use this tool to give them comfort that if you have really short-term liquidity needs that you're not able to mobilize from the interbank market, feel free to come to the central bank and have short-term loan with us. So from July last year, we saw this tool being used. So this gives them comfort now to invest and to lend, because they are not worried of short liquidity needs that they won't be able to meet. If they have long-term investments like in government bonds or that, they can borrow from us against those other assets they have.
10.9% average growth in the first 3 quarters of 2019. In February, I'm sure we're going to be back here to talk about the final quarter. There's estimates of it also being double-digit growth. Now, this is great for the economy. Looking into 2020, there's also belief there may be double-digit growth, manufacturing being a big player in that. Are we past 2020, 2021, or 2022, when manufacturing is still going to play a big role? Is it possible to maintain that 10% digit growth?
You know, it's I wouldn't want to raise any high expectations there, but when you look at the horizon, the projects we have, like if Kwizera Airport picks up, and we expect that to pick up in the second half of this year, that is a massive investment that would have a positive impact on the economy. And as construction picks up, it also drives manufacturing in the construction sector, the manufacturing of construction materials. So yes, we expect, and these are projects that are going to take some time, so we expect to see the medium-term rate remain, I would prefer to say above 8%. So if it goes to double digit, that's our wish, but at least we can confidently say to remain above 8%.
Playing it safe. Thank you for your time, Mr. Governor.
Thank you.
That was the Governor of the National Bank of Rwanda, Mr. John Rwangombwa, speaking to us about the monetary policy in the country, but most importantly, that London Stock Exchange listing. Now, to be part of this conversation, you can tweet us at CNBC Africa, or you can tweet me directly at The Real Kwizera. Have a great evening.